Can't believe January is already halfway over. My gosh, that's just wild to me. We got some good stuff here. Let's talk. And this, I really do. I think this is good stuff today. We got some good stuff on rates. Rates yesterday, and I'll show you the chart in just a second, came down according to Mortgage News Daily, still in that high, or pardon me, low sevens, give or take. But check this out. Look at the last 2 days. The screen one here, you see that on the far right, opened up even higher today. We'll see. It's actually pulled back a little since I did the screenshot, but it is what it is. But check this out. So the big red one you see from Friday, that was the job reports. Job reports came out hotter than expected. That's bad for inflation. That's, it's good for the economy, bad for the inflation. And we just got pummeled on Friday. And then yesterday, which would be Wednesday, we had some good news on inflation. Things looked like they were cooling off. So it's kind of conflicting information, but they kind of just gave back the gains, or losses, I should say. The losses from Friday, we gained that all back yesterday, and we're kind of making a nice little move today. I truly don't believe that we're going to get much higher than where we are, because you see the weeks before all that, we're kind of back in that same range. So we're back to at least being where we were before we got kicked in the gut. So that's good. This is just evidence of what the CPI, the Consumer Price Index, this is one of two measures of inflation that are a big deal. The other one's PCE, but it just shows that it is coming down. And a big part of yesterday was that the numbers indicated that they can and should be coming down again in January, February. And I've been saying the February one is going to start hopefully moving rates a little more positive. So we'll see. I don't think it's going to be any big number as far as like rate movement, but I think that'll at least start signaling more and more inflation. So this may be just the first. I may have been 30 days too late, but that was my prediction, was February. All right. So mortgage rates, you've seen that they climbed the highest. Of course, I got the CPI chart on here. It's my fault, wrong chart, but they're still the highest they've been since July. We've been telling you guys back in September when the Fed first cut, they went from 6.5 now to low sevens. I think and hope this is where we're going to see the highest. We'll see. I hope things won't go, but between tariffs and other things, I could see an instance where rates go higher in the Q1 time period. But I think overall this year, rates should hopefully calm down and start just gradually starting to come down, probably more so in the second half of the year. All right, so on real estate data, Dallas ranked #1 in the United States for corporate headquarter relocations. That is by one magazine, so who knows where they came up with that, but it is certainly true. So God bless Texas. God bless North Texas. I'm certainly glad to be here. I'm not trying to rub it in if you're not, but there you go. This is Zillow's top hottest markets for 2025. You guys can see that I think Dallas is number 30. And we got San Antonio at 36. We got Houston somewhere in that same category when I saw it, 38. There it is. Austin, 46. So the good news is we are not super, super hot in Texas. We were just, I think we're kind of that Goldilocks just right. You can see that Buffalo, New York, of all places, apparently is going to be the hottest. So apparently when the bills are good, people want to move there. Who knew? Beyond that, a lot of Ohio. There were some California, San Diego. That surprised me a little bit, but I thought this was a neat and fun chart. And along those lines, here are the 10 priciest, pricey cities, as they call them. Priciest is a word, where things might be falling for the top 10 areas. San Francisco, no real surprise there, but it's had an 11% decline recently. But Miami, Austin, Denver, like these are kind of the same markets we've been talking about recently. If you've seen them, they're on the right side. The good news is nothing in North Texas. Good for us. And most of you watching this are here with me in North Texas. So good for us. The U.S. median home price, 402. That fell a little bit, but I've just been telling folks it's 400. So it's right there in that same line. Top 10 cities for first-time home buyers. What's interesting, not so much the cities, but I'll show you the next one. And there's a chart or a map, if you will, in the next slide. But the part that I wanted to point out here, the average, or not the average, pardon, the median age of the first-time home buyer is now 38 years old. That's up from 35 years old. So it's taken folks a little longer to buy homes. I saw something else, not here, but it's taking people longer to have kids. Kids oftentimes are the catalyst for home ownership. People typically get married in the early 30s, babies mid-30s. And so those things shifting has also probably helped, not just the higher home prices, not just the interest rates, but probably push things along to say that's why the median age is getting a little older. These are the best markets, again, for young first-time buyers. So Baltimore was the real surprising to me. Like that's the biggest city. Atlanta, Oh, that's not Atlanta. Sorry. Baltimore to me is the biggest city on here. $210,000 for a home. Seems like a bargain. Little Rock, North Little Rock, Arkansas. I've been to Little Rock. It is an awesome part of the country. 160,000 seems like a freaking steal. I would not want to be in Lansing, Michigan this time of year in the winter. But to me, I think this is a really good chart to just show you there still are some affordable homes. It doesn't do anybody in North Texas any good, but at least I thought that was really interesting. Frisco, back to North Texas. Frisco does lead, I don't know if this is good or bad, leads the United States with the most remote workers. So the benefit there is that people can move in to Frisco no matter where they work. If they are remote, they can come in and be part of that. And whatever Frisco's done, they've done it. And it's 34% of its workforce is remote in Frisco. I thought that was incredible. McKinney, 27th, which means they have about 24%. Dallas-Fort Worth as a whole, the Metroplex, about 13 to 14% of people work from home. I, again, just thought these were really interesting, but it all bodes very well for us here in North Texas. Good for us. And the rest of the folks, you guys can see the neat places where people work remotely. Inventory change. This is super important, I think. It just shows kind of the inventory pre and post pandemic. So the red graphs, you see the negative change pre-pandemic. This is the change in inventory. The negatives in each, United States is the very first one. So it's kind of like not in, it's hard to read as far as the chart. The first two, the first black, first red, that's the United States as a whole. Texas is going to be in the south. You can see that we're 0.1, like almost, not negative. In other words, we're back to pre-pandemic. That's a good thing because more inventory means that there's more options for people to buy. We are in Texas. People say we've overbuilt. I know that's a big knock on Austin. Here in North Texas, we're doing well, in my opinion, and from data I've seen. So the good news is we're back to levels that I think make sense, but they're still the Northeast and Midwest. It makes sense that they're behind because, again, with weather being really terrible, it's hard to build a lot of homes when it's 18 degrees outside and 3 feet of snow. So it's harder for them to catch up than, say, us here in the South. Here's the existing home sales, kind of coupled with what we just showed. And you can see that the existing home sales percent change year over year. Look at the last 2024, the last 12 months, give or take. Like it's kind of getting back to where things are good for as far as a steady market. You see 2021, 22, 23, especially in 23, the percentage of change. These are not values. This is just the transactions, the number of transactions down year over year. Well, here we're finally back to where it's kind of just hit a steady consumption rate. And I'm all about steady. I would wish things were better, but I'll take steady. Steady makes people at least relax a little. They don't mind buying when they know that rates, yes, they might be a little higher, but at least if they're flat, they know that they're not going to get hosed if rates just drop the next day, or if they go to 9%, it makes them nervous and they don't want to buy. So I think these are good things. Birth rates, they decline in Texas despite the population growth. That's not, the population growth is like, yeah, duh, like people are coming here, we get it. But I don't think I really knew that the birth rates were actually declining. So the fertility rate hit a record low in 2023, 60 births per 1,000 women. I thought that was interesting. So I don't see a lot of these graphs. I thought that was interesting, but it goes back to what I was saying about the median home buyer. I probably should put this slide up towards the top. The median age for first-time buyers has shifted from 35 to 38. This could be a reason for that because the birth rates decline. Again, kids are a big reason why people start buying homes. And why are there so few starter homes? Back, and I thought this was interesting. In 1982, homes that were under 1,400 square feet was about 40% of the homes that were under 1,400 square feet in 1982. Humans aren't, at least, let's call it North American. North American humans aren't that much bigger. For whatever reason, we now need more space. So now that's only 9% of homes. And that's part of the reason why there's probably this, affordability issue. We're building bigger homes. And some of that is because that's where the margins need to be. Needs to make sense. There's a lot of economics that go in with it, but I just thought that was really interesting and thought I'd share that stat. Now the fun part. Dubai is building a $1 billion skyscraper with a pool in the middle. I am freaking scared of heights. No, thank you. Each resident starts at $10 million each. So the good news is I can't afford it. Wouldn't buy it anyway. But I thought that was like, look at that. That's terrifying. It's like, no, thank you. The penthouse is connected by the pool in the middle. Nope. What else we got here, guys? Let's go to, oh man. We may have to just do the whole like end it here because the slides have stopped for some reason. All right, that's too bad. We had some good ones before. As always, guys, share, subscribe. I'll share the fun ones for next time. You're probably just bored anyway with all these tats. I think they're riveting. I love them. But if you do have some thoughts, comments, or need something from us, you know how to get us. Reach out to Mortgage Mark. We appreciate you as always, and hope you have a great rest of the week.